If you think today's move in gold and silver is just another normal pullback, you need to stop what you're doing right now, because what we're watching in the live markets is not normal at all. Gold and silver are sliding for a third straight session. Profit taking is accelerating, futures are under pressure, and yet we're seeing sudden, sharp rebounds that make absolutely no sense if this were a calm, orderly market. This kind of price action is the definition of volatility, and historically, it shows up right before markets make their most aggressive moves. If you're trading, investing, or even just watching metals, the next few minutes matter more than most people realize. Before we break this down, make sure you hit the like button and subscribe to the channel if you want real-time perspective on gold, silver, and macro moves that most outlets either miss or explain too late. This is Silver Shockwave, and our entire focus is helping you understand what the price chart alone is not telling you. If you appreciate calm, clear explanations in chaotic markets, you're in the right place. Now let's talk about what's actually happening. Gold and silver futures are down again today, marking the third consecutive session of losses, and the mainstream explanation being pushed everywhere is simple profit taking. Traders locked in gains, momentum cooled off, and prices pulled back. That explanation sounds neat and comfortable, but it doesn't explain the full picture. Profit taking alone does not usually create this kind of uneven, almost erratic price behavior, where metals slide, then snap higher, then fade again, all within short time windows. That kind of action signals stress beneath the surface. Silver in particular is behaving differently from gold, and that divergence matters. Silver has been under heavier pressure, partly because it's thinner, more volatile, and more sensitive to leveraged positioning. When risk appetite shifts even slightly, silver feels it first. But here's the key detail most people miss. During genuine trend reversals, silver often looks weak, right before it becomes explosive. The shakeouts come first, the confusion comes first, and then the move follows. Gold, on the other hand, is showing relative resilience. Yes, it's sliding, but it's not collapsing. Buyers are still quietly stepping in on dips, even as futures traders reduce exposure. That tells us there's a difference between short-term positioning and longer-term intent. Big money doesn't chase headlines, it builds positions when volatility scares others away. What makes today especially interesting is the timing. These moves are happening while broader markets are struggling to find direction, yields are unstable, and currency traders are trying to guess the next move in monetary policy. When everything feels uncertain, gold and silver don't always rise immediately. Sometimes they hesitate, sometimes they pull back, and sometimes they frustrate everyone right before they do exactly what they're supposed to do. Those weird price rebounds you're seeing aren't random. They're signs of liquidity battles. Sellers push the market lower, stops get triggered, weak hands exit, and then buyers quietly absorb supply. That push and pull creates sharp intraday reversals that look chaotic if you are only watching the chart, but makes sense if you understand how positioning works. This is where patience becomes a weapon. Most retail traders get chopped up during these phases. They sell weakness, chase rebounds, and slowly bleed capital. Meanwhile, experienced participants wait for clarity, not confirmation. They watch how price reacts to pressure, not the pressure itself. Another factor you can't ignore right now is futures positioning. When metals slide for multiple sessions in a row, margin pressure builds. That forces leveraged traders to reduce exposure whether they want to or not. Forced selling is not the same as bearish conviction. Once that selling runs its course, the market can move very quickly in the opposite direction. This is why days like today matter more than big green candle days. Big moves are born in boring, confusing, and uncomfortable price action. If you've been around the metals market long enough, you've seen this movie before. First comes the grind lower, then the fake relief bounce, then another wave of selling that convinces people the move is over. And then, without warning, price takes off. Right now, gold and silver are sitting in that psychological zone where sentiment starts to flip. Optimism fades, confidence cracks, and people begin questioning the entire thesis. That's exactly when long-term buyers start paying closer attention. Here on Silver Shockwave, we don't hype every tick, and we don't panic over every pullback. Our job is to help you see the structure behind the noise. And the structure right now says volatility is expanding, not contracting. Expanding volatility almost never resolves sideways. It resolves with force. If you're watching live prices and feeling confused, that's normal. Markets are designed to confuse the maximum number of participants at turning points. Clean moves feel obvious only in hindsight. In real time, they feel messy and uncomfortable. Gold AAS role as a monetary hedge hasn't changed just because futures are sliding this week. Silver's industrial demand hasn't vanished just because traders are taking profits. What has changed is short-term sentiment, and sentiment is the most unstable variable in any market. As we move deeper into this session and into the next few trading days, watch how metals respond to bad news versus good news. If prices stop falling on negative headlines, that's a signal. If rebounds become stronger and dips get shallower, that's another signal. The market speaks through behavior, not predictions. This is also why it's important not to overtrade moments like this. Sometimes the best move is to observe, document, and wait. Markets reward patience far more often than they reward urgency. If you found this breakdown useful so far, drop a comment below and let me know what you're watching most closely right now, gold or silver. Are you expecting more downside, or do you think this volatility is setting up the next leg higher? I read the comments, and your perspective helps shape future videos. As we wrap this up, remember this. Extended losses don't mean broken trends, and weird rebounds aren't accidents. They're signals of transition. Whether the next major move is days or weeks away, the groundwork is being laid right now, in real time, in the price action most people are ignoring. Make sure to share this video with someone who is watching the metals market but feeling unsure about what they seeing. These are the moments where understanding matters more than prediction. Stay sharp, stay patient, and stay informed. This is Silver Shockwave. Thanks for watching, and I'll see you in the next update.